The key highlight for us has been the resilience of the portfolio. So all three of our main renewable energy segments, wind, solar and anaerobic digestion, have performed ahead of target over a period that's been challenging for everybody. And it's this resilience that is key to supporting our dividend targets. And we see JLEN's portfolio diversification as contributing to this resilience. We've also been able to continue to grow the portfolio. We made 2 investments in UK projects with an acquisition in an anaerobic digestion facility and the 100% acquisition of a hydro portfolio with a co-located battery. And each acquisition built on existing relationships that we have within the portfolio, and this allows JLEN and its shareholders to benefit further from our existing presence in these markets. We like these hydro and anaerobic digestion assets because of their high levels of subsidy support, reducing exposure to electricity and gas prices, and increasing the amount of inflation-linked revenues earned by the portfolio. JLEN has joined the FTSE 250 in the period, which brings us to the attention of a new set of investors. The overall portfolio's valuation was just under 553 million, with NAV per ordinary share of 96.1 pence. And that's a slight decrease compared to March due to a reduction in long-term electricity and gas price forecasts.
We're pleased to report a further interim dividend of 1.69 pence per share, making a total dividend declared for the 6 months to 30th of September 2020 of 3.38 pence, in line with the target set out in JLEN's 2020 annual report. We had a cash dividend cover of 1.1 times on dividends declared during the period, and we aim to provide a sustainable and progressive dividend to our shareholders from a range of sources with an element of capital growth.
We've also continued to focus on ESG matters, which are important to JLEN as a company. We set out our ESG objectives as part of the full year report, and we're in the process of establishing KPIs that support these objectives and help us to measure our progress. Power prices fell as demand for electricity fell. We're less exposed than many owners of renewable energy generators due to the nature of our portfolio diversification and the high level of fixed price inflation-linked subsidy revenues that we earn. We also try to mitigate what exposure we do have, and so currently 75% of our electricity price exposure is either fixed or has a floor price for the remainder of this winter season, and that gives us some protection against further lockdowns.
The infrastructure and renewables markets remain very favourable in both the context of global and UK government policy and financial support for decarbonisation initiatives. And this is echoed by strong activism at a grassroots level and by funds under management targeting this sector. In recent months, the UK government has demonstrated its commitment to a low carbon economy by setting out a number of measures to support the continued growth of renewable energy and promoting the efficient use of that energy. Indeed, we have seen this laid out only last week in their 10-point plan, which also points towards the growth of a number of exciting new sectors, many of which we hope JLEN would be involved in given its diversified mandate. So, whilst renewable energy generation remains our principal interest and focus, JLEN also considers opportunities in sectors such as low carbon heat and transport that have the characteristics of infrastructure investments such as inflation-linked cash flows and stable revenues supported by long-term contracts or regulatory support. We also anticipate investments in continental Europe becoming much more of a feature within the portfolio, as we see a number of compelling opportunities in these countries. So overall, we remain committed to providing our shareholders with a reliable income, resilient to the shocks that we have witnessed recently, owing to the benefits of JLEN's diversified renewable infrastructure portfolio.